Good evening. This is the Elliott wave update for the S&P 500 for Monday, April 4th, 2022. A very strong day to the upside today. As we can see here on the daily chart, it was just one solid green bar, and the market's pulling off ever so slightly at the start of the Globex session. We're down here in the S&P a whopping $3. I want to unpack a few things and to bring us up to date on where we are and what our potential is going forward and how that fits in with the long-term view and what we could possibly be walking into. All right, so starting here on the daily chart again, I leave the 5 and the 5 and the 5 are all in the same place. That's at 4,809 or 808. And what I have counted thus far is an intermediate wave 1 down, and now we're in intermediate wave 2. Now I had moved up to Friday's, actually it was last Thursday's low. Excuse me, actually it was before that. The high at 46.31 got marked as the top of wave A of intermediate 2. And then we were expecting a B wave, and so far we've gotten down to 45.01, not bad, possibly just wave A. So that today, and I'm going to drop down to the 30 seconds, so we can 30 minute, excuse me, so we can take a look at what the interior of this is going to be. So this could be wave A, and now we're in wave B of B, right? So this is the A wave up, A of B, B of B, we get a C of B, bringing us back down. That's the first possibility. If that's the case, this would be counted as A, B, and then 1, 2, 3, 4, 5, possibly. I really, and under this scenario, I maybe up to 4,600, but beyond that, then I don't think that it's going to be what I'm describing. And so I think pretty much right from here, if we turn and we start to move lower, we've got a higher chance it'll follow through as wave C of the internal B wave, get us back down below 45.01, which is that low, and down, towards this low, 44, like nice number, easy to remember, and possibly as low as 43.72. And then we just need to figure out, that would be where wave, let me see, let me just take a look. This is 46.31, this is 45.01, so it's approximately 130 points. 130 points is 44.80, 44.50. Bingo. So if we got all the way down there, pretty straight shot, it's going to be equal to what we just did. And that would be fine. So that would be wave B, and then we're still going to get that C wave. Now, should the market really start to continue to chug higher, and it gets itself above 4,600, and then it eventually looks like it's going to get itself above 46.31, back out to that daily chart. Scenario number 2 is that this is wave A, this becomes wave B, and we're in the C wave up. Now, if this is the case, we could be walking into some trouble because we didn't dip as low as I had anticipated. We now have to make up for that room possibly on the upside for it still to be an intermediate wave 2 or a corrective ABC higher. So we'll leave it here and allow the market to come back down. If the market comes back up, breaks that, and then starts to head and even start sniffing around at 48.08 to 48.09. It's really going to start to change the count, not in terms of the degree or the longer term view. What I then believe what would happen, leaving this as the high, this turns into an ABC down, and it'll still be here. And this all becomes a B wave. And that's A of B, B of B, C of B, very possible, very possible. And if that's the case, then I would be looking for 48.28, 48.75, 49.18, even higher. The irregular part then jumps us to 49.76, up to the possibilities of 5,080. Now, is it a bullish move? Yes, obviously. Is it tradable? Very much so. Does it change the longer term view that you just put out? Not at all. Now, I will just draw your attention to one other, I'm going to go up to the monthly max. This B wave in the S&P basically came up and equaled the top of 3. In the Dow, it made a new all-time high all by itself, excluding the Russell, the NASDAQ, and the S&P. None of them made that new all-time high. The Dow did it all by itself. And then we had 2009, the 2008-2009 financial collapse to complete that cycle 4. Okay, now, going back down to that daily chart, if it does it and it gets, let me pull that open a little bit, and it gets itself up here, I would still be looking for a very destructive C wave down, a very destructive, blowing a lot of people out, just not taking any prisoners, crash like. Now, we've already talked about what can create it. All of those reasons would remain, in my view, present and accounted for, whether we got up to 4,766 or whether we got to 5,080. Everything remains, in my mind, the same. I do not believe that, but from the time it takes for us to get there, or even above, close to those all-time highs, that anything substantially would have changed. Inflation will not have been taken care of. Interest rates will still have to go up. The economy was still going to try to chug along, but it's going to have a lot more trouble. We still have problems coming up in our own interest rates. How is that going to affect the housing market? How is that going to affect us as consumers? How is it going to affect buying a new car? How is it going to affect everything? What is really the outcome and the price to pay for what's going on in the Ukraine? How is that disrupted? I've gone over all of this. Basically, yesterday in interest rates, I've gone over each one of those, what we get from the Ukraine and what the global economy gets from the Ukraine. So none of this has been established. So for the market to run up, could not care less why they want to do it. Please remember, there will be plenty to trade. There will be plenty of options to trade. There'll be plenty for every type of trader. Plenty, both sides, lots of premium. It will still exist. And then it just gives us another opportunity. If you're a position trader and you kind of go like, gee, I really want to get in, you might get your opportunity to get in at some extremely juicy prices. And trust me, the volatility in the puts, I think, will be so low that there'll be plenty to do in preparation of planning this far out. Okay, for tomorrow, again, the first scenario is that it could drop back down within this corrective internal wave that it's doing right now, and possibly we get down to about 44, and then still turn higher. If it stops here and it continues to move higher from here, and we break above 46.31, then our B wave is complete. We're in the C wave of either intermediate wave 2 or intermediate wave B. And then we've got our Fibonacci's going on the way up. A break above 48.09 with a little bit of follow through shifts the gears again, keeping it as an intermediate B wave, but what we're labeling as intermediate 1 becomes intermediate A. And the consequence, we have higher prices to get to on the upside still, but now we're in an irregular wave. And that would be the first zone right in there. So we're not looking like it's going to race to these new highs. But here is the next zone, because it's an irregular B wave. Look it up, check it out. These do occur. And it's one where Elliott himself actually said, Then you get to an all-time high, it's not unusual for it to be corrected twice. You know, corrected twice. What are you talking about, guy? Here's the first correction. We've taken up to a new high. We come back down. That's the second correction. It's going to get real interesting. But no matter what, no matter how high it gets, I will be looking for a destructive decline to come. I'm going to leave it right there. Let's play safe. Let's play according to what the market is telling us and continue to use the tools that we have. Our next update will be Tuesday, April 5th.